This is today's Daily Market Comment by Mario Hadjikyriacos. I'm Christina Marujos. Thank you for joining us at XM.com. The party in U.S. stock markets continues to rage. The S&P 500 and the Nasdaq hit new milestones yesterday, with tech heavyweights being at the tip of the spear after the Fed chief reassured investors that the cheap money punch bowl won't be taken away immediately. With the Fed playing it slow on normalization and Congress set to unleash another multi-trillion spending spree to power up growth, the stars have really aligned for equity markets. The main worry is the Delta outbreak, but as we've seen time and again, markets rarely bleed because of virus developments. If anything, virus worries are essentially a self-correcting dynamic for stocks, especially in the tech sector. Over in the FX arena, the US dollar continues to bleed as markets price in lower chances for a September taper announcement by the Fed. The good news for dollar bulls is that this is a case of tapering being delayed, not derailed, hence why the retreat in the greenback has been minor. The next edition of non-farm payrolls this week will go a long way in settling the taper debate, but in the big picture, it doesn't matter much. It's only a matter of time. Capitalizing the most on the dollar's latest troubles have been the usual commodity FX suspects. The Kiwi in particular has enjoyed a very sharp rebound as markets turn more confident that New Zealand will defeat the virus once again, allowing the Reserve Bank of New Zealand to initiate its planned rate hike cycle. What's especially striking about the recovery in commodity-linked currencies is that this is taking place despite signs that China is slowing down. The nation's PMI surveys for August confirmed that growth is losing momentum, with a composite index crossing below the crucial threshold of 50. Making matters worse, Beijing continues its regulatory crusade. The issue here is the timing of these changes. Structural reforms into a slowing economy rarely pay off. As for today, we get the latest Eurozone inflation stats and growth numbers from Canada. There's growing chatter that the European Central Bank could also dial back its asset purchases in September, but even in this case, it would be almost a fake taper, with the ECB slowing its emergency pandemic purchases only to increase its regular purchases later on. Rates won't rise for several years, which is ultimately what matters for FX markets. This was the Daily Market Comment. Thank you for watching at XM.com.